Greetings to all my YouTube followers. Here is the latest video offering an exciting new way to play AIM investing. I'm Jeff Weber, the creator of AIM investing with long-term options or leaps, and my partner is the other handsome gentleman on the screen, Brett Hofstad, who greatly helped me edit my last book, which you can see behind him, called Aim for Millions with Stock Options. Now, that book was designed for wealthier investors who might have a lot of money and would like to make even more money. But I haven't forgotten people who would love to make money but don't have a lot of money to start with. And so I have come up with a new, exciting way for smaller investors, even if you have $1,000 or less, to get tremendously high profits long-term, forever. This new, exciting method is called Lean AIM, and I will explain it in just a little while. I'll just give you a minute or two to explain how regular AIM works and how lean AIM is a little different. With regular AIM, if you had $20,000 to invest, you would start with $10,000 worth of long-term options or leaps and $10,000 cash. Well, let's say you only have $1,000, but you want to make high profits. Then I'm going to explain how to do lean AIM. And it's called lean AIM because you don't do any buying with lean AIM like you do with regular AIM. Regular AIM includes buying and selling. With lean AIM, you're strictly going to go for a quick sell and a 25% profit. So now I'll explain how it works. I will help you find a good option that is at or near its 52-week low. A good example would be Micron, okay? We're recording this on April 22nd, 2023, and we're going to talk about buying Micron on March 15th, 2023, and wind up selling it about a week later. Now, Micron is a good example of how lean AIM works well with puts as well as calls. And all a put is a chance to make money on a stock that is going down. With a put, the leap or long-term option goes up when the stock goes down. It's the opposite with a call. When a call goes up, the call leap goes up. So this was an example of that one of my clients owned, and we decided to get him out of the position by selling them as a lean AIM. And here's the essence of how it worked. We bought 3 2025 Micron technology, the symbol is MU, strike 55 put, which was at the money. That's the advantage of lean AIM, you can buy at the money. So we bought 3 contracts at $8.30 or $830 a contract. So we spent a total of $2,490 to buy that. Again, we're not doing any more buying. As soon as we owned the Micron put, I immediately figured out a price 25% higher than we paid for it. So we were betting that Micron technology stock would go down, which would make our leap go up. So we put in a sell order at 25% higher, which was $10.50. So that meant we bought it at $8.30 and we're going to sell it at $10.50 for a $220 profit per contract, or $660 profit. Well, we got very fortunate, and here's another advantage of why we love limit orders. The limit order we put in allows us to keep that price on the stockbroker's books for as long as it takes until we get to sell without having to do anything else. So we put in our sell order at $10.50. Well, we got lucky and we sold it about a week after we bought it, and we didn't sell it at $10.50. We were able to sell it at $10.80 because obviously Micron was going down faster than even we thought it would do. So my buddy made an extra $90 in profits. So long story short, we bought it for $2,490, and less than a week later, we sold it for $3,240 for about an $825 profit in 1 week. And then the advantage of AIM always is you want to compound your profits, whether it's regular AIM or lean AIM. So we immediately took the 3,240, which included the profit we made on the first lean AIM sell for my buddy, and now we have 3,240 we can invest into AIM, and we will continue this strategy into the future so that you always have more and more money to buy more and more AIM. And normally you're only going to buy 1, 2, or 3 contracts, because if you have 1,000 to invest, I would rather you have some diversity and not buy, 4 contracts of 1 for 1,000, but buy 2 or 3 different leaps and, just get 1 or 2 of those. And then you have 3 times the chances of getting a quicker sell and reinvesting your money. Brett, have I stirred up any questions in your mind?
How about some people now might be thinking they need to invest, but they're worried about the bear market that we're in, and when is a good time to start investing, start using AIM?
Yes.
Can you say about that?
Now is a good time to start investing because the stock market itself is down. I mean, everybody likes to categorize the stock market currently as a bear market, but that's misleading in a little bit, but because there are still spurts when a stock that is way down can go way up. So that's why I'm telling people now is a great time to either, do regular AIM or lean AIM, because you can buy at ridiculously low prices. The stock market has not been affected by inflation. It's been affected by deflation, if anything. So I can find many good suggestions to give you for either regular AIM or lean AIM, and I'd be happy to do it when you become my client.
Okay, thanks, Jeff. Well, this was great. I really think lean AIM is genius because it allows people to do more with their investing money.
I'll give you the perfect example of it, of how AIM can really benefit you. I stumbled on a great guy named Claude who really helped me, and he's coming out with a new super duper spreadsheet for AIM that we'll let you know more about in the future if you're interested. He was trying to do AIM with all stocks. He had a very interesting portfolio. He was doing AIM with 28 different stocks, which was a bit over too many in my opinion. And I looked them up and I told him, I said, hey, Claude, half of yours, 14 of your 28, have leaps. Have you thought about doing your AIM investing with leaps instead of stocks. And I got him interested. And then I explained lean AIM to him. And I said, the advantage of lean AIM is you can afford to buy the cream of the crop stocks, and you can afford the leaps on those stocks because you're only buying one or two. He said, okay. Well, I got him interested. He owned 12 shares of Tesla stock, as a matter of fact, and I don't know how he thought he was going to make a lot of money with AIM with 12 shares of the stock. But I convinced him, or helped persuade him, to buy one Tesla Leap to try lean AIM with. So he, on March 9th, he bought one strike 200 call, which was Tesla's in the money point, right at the money or in the money slightly. And I said, we're going to buy one for $5,000, and all you're going to have to pay for the privilege of doing that is give your broker 65 cents. Is that a bargain or what? What else can you buy for 65 cents? I don't know of anything. You can't even get a hamburger for that. Okay, so we put in the order on March 9th at 50. Again, we used the standard formula. We said, what's a price 25% higher, rounded off, that we're going to sell it at, that we want to sell it at. So since he bought one contract for $5,000, and that meant each option was priced at $50, because to confuse you, brokers' option chains will show the price of an option, not the price of a contract. But with options, you always have to buy a contract, which equals the price of 100 options. So by the option being $50 an option, he had to spend $5,000 to buy one contract. Okay, so we put in our sell, limit sell, of course, at 25% higher, and that worked out to be a rounded number of 6,500. So we bought it at 5,000, and we planned to sell it at 6,500. When he sold it, he was going to make a $1,500 profit. Very nice. Well, it worked out perfectly. He bought the option on March 9th and sold it March 22nd, maybe about 2 weeks later. So he made $1,500 in 2 weeks on that option. And again, since we're compounding profits, now he has 6,500 he can buy more lean AIM options with. So I'll summarize quickly how you do lean AIM. It's so simple. And if you go with me and become my client, I will set up the spreadsheets for you. I will show you the sell price you want to ask for. And then all you have to do is make the buy as soon as you own it. And normally I would recommend you buy it at market so you own it immediately. Because I tell people, don't sweat the pennies. So you pay 10 cents more for the option. No big deal. You want to own it to make the profit on it. So we set him up with that one, and he's off and running, and he's already had sold one or two others since then. I started a binder to keep track of them all, and so far, in less than a month, my clients have had at least 10 sells using lean AIM. So it's working very well and very quickly. So it's a great way to get started with AIM, and my dream is you start with 1,000 or 2,000. We will get you up to the point where you can have the perfect ideal portfolio of maybe 3 regular AIMs and 3 lean AIMs, and you'll have diversity for a lot less money by mixing lean AIM and regular AIM.
Yep, and I'm one of those people that had a profitable sell, Jeff, in the past week. One of my right. So I think, if I recall, it was about 24% I made on that one leap
on
because
Bank
we
of America.
set the price for that. Yep.
And again, leaps are only issued on the best stocks out there, and I'm helping you pick the best of the best stocks out there. So you have a great chance of making profits quickly and high profits quickly, because leaps are always 5 or 6 times as volatile as the stock they represent. I mean, I guarantee you, when Claude's Tesla went from 5,000 to 6,500 for about a 25% gain, I can tell you Tesla stock didn't go up 25% in those 2 weeks. Maybe it went up 2 or 3%. But the beauty of you investing in options is, if the stock goes up 2%, the leap will usually go up 10 or 15%. So you have a much better chance to make higher profits much more quickly by buying the option. Plus, the option is cheaper to begin with than the stock. Because, think about it. If he had bought 100 shares of Tesla, which is what his option gave him, he gave him the right to control 100 shares. You don't need to own the stock, you just need to control it. So if he had bought 100 shares, it would have cost him $20,000. Buying one leap contract only cost him $5,000. So it's by far the best way to invest for people who have less money, are starting investing later in life, and need to catch up for all the years they weren't able to invest towards their retirement. Because I hate to break it to you, but nobody's giving you a pension anymore. Sorry. So you have to replace the money that old fogies like me used to get. Literally, though, the year after I started working, the U.S. government abolished their defined benefit pension plan. So if you don't have that, a 401k is not going to get you there. I'm sorry. You need to do some investing on your own, and lean AIM is by far the best way to do it. Now, I'm sure I couldn't explain everything you might have questions about for lean AIM, so that's why I'm going to give you my phone number and email address, and you are welcome to call me or email me with any questions you have about lean AIM. I'd be very happy to send you the short article I wrote on it. It only takes 5 minutes to read, and that 5 minutes is going to be the best time you ever spent in your life reading anything, let me tell you, because it's going to give you a path to the future that you're going to want. So, again, my name is Jeff Weber, W-E-B-E-R. My email address is jeff@jjjinvesting.biz, B-I-Z, and my phone number is 210-478-0655. And I'm so flexible, you can call me anytime. I don't have hours. I just have services to offer to people, and I'll do it 7 days a week. I'm recording this on a Saturday, so I never take a day off from AIM. I will send you information on my services, and you will see that once you sign up as a client, I am giving you lots of services, the most important of which means I am checking your leap every day at the close of the market, and I check and see if you had a buy or sell. You wouldn't have a buy with lean AIM, but you would have a buy or sell with regular AIM. And if you just do lean AIM, I'm looking to see if you had a sell. Because the key to investing in a volatile product is to stay on top of it, which means if AIM tells you have, the sell, then we want to get that money out. And maybe even that evening, I'm going to tell you, okay, you made a profit of 1,000. So now instead of 2,000, we have 3,000 to invest in maybe two different lean aims and get those orders in tonight, and you're ready for the market when it opens the following morning. So you will find there's nobody in the world who will give you better customer service than me, because I am totally dedicated to helping you achieve the life you want. And I think there's nothing more important than helping other people in this world with the skills that God gave you. And He gave me the skill to do this. And I can honestly tell you, I am the only one in the world offering this way of investing. Why? I don't know, but I am. So if you want to find an easy way to invest that doesn't take much money, you definitely want to send for my article. Again, my name is Jeff Weber. I'd love to hear from you. I'm so glad I stumbled on this, because I had so many investors who didn't have a lot of money, and I felt kind of helpless that I couldn't do much for them. And then I came up with this idea, and it's worked like a charm, and it will continue to work like a charm. So you'll see it's so simple. And all you need to know to do this is arithmetic. And I'm sure you can do arithmetic. There's no Greeks, nothing fancy. It's arithmetic, adding, subtracting, multiplying, and dividing. And that can make you a millionaire.
All right, thanks a lot, Jeff. I'll vouch for your great customer or client service, because you stay on top of my portfolio. You're always looking for the best new leaps for me to buy, and you're on top of things and you're available. So you're an awesome investing
Thank
coach.
you. I appreciate that.
Okay.
That's all from Jeff.